Hey, welcome back to today's Technical Tuesday. My name's Karl Eggers. Thanks for joining me. We'll run through a few charts today. We're going to run through the Dow Jones, as you can see on the screen. We're going to look at interest rates, which are about above 2.4% for the first time, I think since May. So we'll take a look at that and the impact. And then we're also going to look at metals and mining ETF, and we're going to look at steel stocks as well. And if we've got time, we'll throw in Japan as well. So let's take a look at the Dow Jones first of all. And we have the Dow Jones, of course, up a little over 200 points as I'm recording this. And of course, we had some big earnings today, 3M, Caterpillar. So we had some of these Dow components that are really boosting the index, and the Dow Jones is the strongest of the indices, up just under 1%. You have the Nasdaq up about 1/3%, and the S&P up just 0.2%. So again, one of those days, kind of like we saw with IBM last week, where a few high-priced stocks pushing the index up, but definitely a green day, just not as strong as maybe the Dow Jones appears to be. So let's take a look at this quickly, and you'll see the Dow Jones. Of course, we go back to really February of 16 when this rally started. And what you'll notice is that we're basically in this channel. And you can see it here. We're at the top end of it now. So this was where things bottomed out. Oil bottomed at $26 a barrel. We started to, of course, we didn't know we had any type of channel at that point. But here we were kind of at the top of this. And then we started to form this channel. We've never really come down to the bottom end of it, but we're at the top end of it right now. Relative strength index is at high amount. So, again, can we get some type of sideways pattern or even a pullback over time? Absolutely. So Dow Jones overbought in the short term. Now, also, we're going to talk about small caps. I think I failed to mention that, but small caps, a lot of people talking about how expensive small caps are on a valuation basis, but they are working. Perhaps that's because of the potential tax cuts coming. We'll see that. But, small caps had a big run after the election, and then we've kind of just been moving sideways. You can see this channel I've drawn here, bottom, hitting off the top. Well, we broke out right here, and now what's happened is after that run, instead of coming back to, which I think we may have even talked about last week, small caps are actually just kind of sitting there moving sideways. And what's interesting is take a look at these Bollinger Bands that are getting tighter and tighter. I think the longer we move sideways without going down, we could see a continuation of this. So let me clear this off a little bit and you can take a look. Basically, I think what's going to happen is as this continues to move sideways, the Bollinger Bands get tighter, then we could start another leg up. So there is still money moving into small caps. Okay, a couple of weeks ago, we did cover interest rates, and it was actually looking bullish for rates to go down, meaning if you owned bonds. And now what we've been seeing is that trend is reversing. What we were talking about at the time was really this pattern, and we said, hey, this thing looks like it's peaking out, and interest rates had been heading up, and maybe they're going to start rolling over, which they started to. That is not the case anymore. We've actually broken out, and now it looks like they may be trying to head higher. So let's watch this area here around 2.4. Again, we're right at it today. If we break above, of course, the next level here, 2.6, comes into play. We know that the Fed's trying to unwind their balance sheet, and if the economy continues to do a reasonably job of growing, then we should see interest rates rise. And obviously, depending on who the next Fed chair is, that could also be a determining factor of where investors take rates. So we could see this thing break out and continue up to 2.6%. Here's the metals and mining ETF. XME is the one. And you'll see, again, post-election, like a lot of things, gave it all back, and then slowly, kind of like an airplane, starting to take off here. And I kind of like this pattern. Of course, what we should see is this thing start to test the old highs here. But these are up almost 2% on the day. So watch for continued strength up to maybe that $35 level, which is another $1.50 away from where we are now, maybe about 5% or so. And kind of a similar picture with steel stocks. What we're seeing with steel stocks is very, very similar to the XME. Again, post-election run. Didn't quite give it all back, but a lot of it. And now we've been starting to head up You can see I've drawn this support line here. So if you're trading this, I would probably keep your stop right below this support line. And again, we're going to run into some resistance. If this is a measured move, you kind of look at this down. You take the points that it lost at that point, come back to this line. That could be the points gained on the upside here. So if we kind of take that and say, hey, it went from 45-ish to 35-ish, that means this could run to 55 over the next few months. So let's watch steel stocks again, kind of a cyclical name. And lastly, the next area to watch is Japan. Probably most of you aren't directly invested in Japan, but it is interesting to watch. We've liked the international markets for a while. Japan taking off here. And of course, this is EWJ. You can see it's breaking out. And this is a multi-year. This is the financial crisis. So we saw a huge drop there, just like with everything. And it's slowly recovered, but we have seen several weeks in a row of Japan being up. We've seen several days in a row of Japan being up. So obviously there's money moving over there. Doesn't mean the U.S. starts to go down, but it could mean that we see what we believe might be the next few years of outperformance of both developed and emerging markets over the next few years, that performance as money shifts. So let's continue to watch that. But right now, Japan kind of going parabolic. EWJ is the symbol. If you want one where it's hedged, it takes the currency out of the equation. DXJ is the Japan hedged equity wisdom tree, DXJ, and you can see that's moving up as well. So again, just depends on if you're watching the currencies and wanting to participate in the yen strength or weakness. Depends on which ETF you buy. And don't forget, everybody, eggerscapital.com is our website, EGGERSS capital.com, and go check that out for our weekly podcast. And if you have any suggestions for our Technical Tuesday, make sure you email me, Karl at eggerscapital.com. It's Karl with a K at eggerscapital.com. Have a good day, everybody.